Hi everyone. Looks like my speaker was off. If you have spoken, sorry for that. Okay, so today is 11th March. What a week. What a week. No need to talk about it. Everybody knows what happened. Mhm. Okay, so let me start at a low time frame, 1 day time frame, or maybe let's look at 12 hours. This is Binance layout or chart. Quick recap on the price action and then focus on the current state and then potential future scenarios. Okay, so 12 hours, if I zoom out and focus on the consolidation, which is this, no, I think even this is like more granular to the consolidation which is happening. Okay, so R1 was the point of rejection, which we talked about for last couple of weeks. We have covered this part that this is a resistance, and then I provided bunch of supports. So supports defend, try to defend, not necessarily able to give the reversal. Now in this process, if you look at this zone supported, bounce was not high enough. Then another support gave some rise, but not high enough, which would break above. Meanwhile, our required level was somewhere here. Required level is the level which is needed. I mean, which is required for it to make a new high, higher than R1. So the bounce was not high enough, made new low with respect to this particular wave. Again, after support, got bounce, but not able to clear this support. Then I lowered the required level. It went down to this one. There was pause, no bounce, pause. Only if you look at few hours of pause, it was trying to consolidate. Nothing quite happened, and this was the required level, quite close by, but not even able to touch this. And of course, this was the Feb low was the major risk. And because what happened if you look at the consolidation um, using simple trend line, that initially it was like this pattern where we were expecting. So this was the pattern. It came down. This is totally fine. Went up and went and touched this one. This was also fine because this was still on this line. So this was the best case scenario where it could have gone up. The best case scenario would have been like it should I mean, I'm just covering the pattern aspect. Then of course we'll talk about the present, but it's some of you interested in TA would learn and how it progressed. It will help you understand. That's why I'm covering this part. So it would have consolidated here and went up or broken above somewhere here from a bullish case point of view, from a continuation point of view, but it didn't happen. So this line was the first line of defense, you may say, which was broken and when it landed here. And the funny part of TA is this line angle changes sometime and landed here, and this was also equally valid because it was touching all these points. So this was also secondary support, and which was totally all right. And because if you look at, then it bounced and also retouched, and this was the perfect one. So it could have again consolidated here and moved up, but not able to do it when it touched or failed over here. This was very sharp move, as we know. In matter of minute, it went down. In matter of minute, this was really fast. So technically this was second breakdown. Like this was the first breakdown, as I explained, using simple trend line method. This is the angle changed, the method, I mean the expansion, the consolidation expanded, and of course then comes to the horizontal, and then this provided some sort of support, very boring one as we know, for 3-4 days. And this was a third line of defense, you may say. And of course this was also not good enough, and then fourth one was not through this pattern, but from the February low. That was the fourth line of defense. That was also broken, and then finally you can say it is somewhere here. We can say it's not a perfect one, not bad. Yeah, it's not perfect. But not bad. We can connect the opening part. So if we do that, then we get this one. So first, second, third, fourth, and the fifth. Now this looks so odd, but yeah, this is also this is the fifth one. Now, if in this pattern, if you look at it, this is again the most expanded pattern. So a couple of you just joined for your quick, benefit. I mean, it's recorded, but still, just to get you up to speed. This was the first line of defense, broken. Then this was the second line of defense, broken. Then this was the third line of defense, the horizontal line, broken. And then the February low, broken. And now this one. This is where we are at this moment. Right? Now, of course, this consolidation broken when the horizontal is broken from, but this is expanding pattern. So it is weird pattern, but it is observed many times, which I posted on academia. If you refer, expanding patterns are there. It was observed in many occasions. The biggest pattern is observed in bond, treasury bond yields. So you may check it out. In fact, we have it here, so we can open it quickly. In 12 years, 10 years. So if you look at it, this is how it expands. It was following the green, then following the blue, and then follow the yellow. So if in that process, what happens is you see like a light beam I depicted with a sun symbol. So this is more like a parallel channel, and then this is more expanded channel. If you look at white and blue, and then you look at white and yellow because it touched this. And now what happened is it touched all the way up to the white. Of course, going through this, where you see resistance, going through this, where you see resistance zone. Let me turn. But you can clearly see this is the biggest pattern because this is 40 years old. I mean, this is 40 years long channel, expanded pattern. And this is what happened. But if you look at this, took 40 years for it to reach here. And it took only a couple of years to break above. So funny. In fact, look at the move on a treasury yields. And that's what happened. And it broke above ultimately. And now it's somewhere here. So very deadly pattern. That's for sure. So let's come back to our BTC pattern. So this is how expanding pattern works. You can see how beams are expanding. This beam is expanding. We can extend this, of course, and if it doesn't break down, it is possible from a scenario point of view and a pattern point of view. If this recovers, of course, with a up zigzag manner, not in a straight line, with this trajectory, it would touch this and eventually break above and go for R2 somewhere in month of April. So with a condition that if this support is not broken, with if condition, then it would follow, or maybe I would draw something on a weekly, but at this moment I would just draw simple trajectory. But on a weekly, I'll try to draw more. more of its pattern, like shape point of view. So this is what is the bullish case from here on if there is no new low. Now, fundamentally speaking, what is happening? There's so many that now more and more variables are being added. The earlier the only major variable was inflation, and of course related chart like DXY, dollar, treasury yields, the war, supply chain issue, all those factors basically were contributing to, I mean, those are related to Bitcoin price action, and we were tracking that. Now we have, and of course, FTX episode we had last year, crazy, and other couple of other, institutes or entity failed before FTX, and now Silvergate. Now this is beyond crypto. It's not a huge bank. But problem is this bank. Those who are not aware, I'll briefly cover that we're talking about two banks. First Silvergate, and then Silver Valley. So there are two banks we are talking now. Silver Valley bankrupted, their trading halted, their stock crashed, and of trading halted basically yesterday before the session started. And yeah, so they are going to get liquidated. I don't know how much asset they have now. That's a big question. But it's so surprising that the regulated entity also failed like this, which is totally a failure of regulation. Now one can argue one. So this is tragedy, I would say, that when the FTX was a bad player. In my opinion, there is no regulation required. However, regulation required because there are bad actors. Otherwise, there is no need to regulate anything. And because bad actors like FTX and other, in last year, what we saw, that regulators get a chance to say that this industry requires regulation, control, auditing, more transparency, and so on, which makes sense because of what happened. People lost a lot of money. However, regulation is not foolproof. And especially the big banks where I work, they are heavily regulated. I'm not saying small bank like Silvergate was not regulated, of course, but I don't think they go through rigorous stress testing like big banks like JP, Bank of America, Morgan Stanley, Goldman, Citibank, like banks go through. So many, I don't think the small banks go through that kind of rigorous Fed uh, stress test. I might be wrong, but definitely they don't have enough resources and probably focus because they are not too big to fail. But what happened is, so Silvergate is not a too big bank for the Wall Street. Of course, it affects because there are some small companies associated with Silvergate from their lending borrowing business point of view. But the problem is the crypto companies always go for the small companies because they are always attractive. Remember, small banks are always attractive because they provide attractive interest rate. I mean, fund with attractive interest rate and the feature which because otherwise there's no advantage for anyone to go for a small bank. Why not to go to Chase or Bank of America, Citi like banks? Um, the small banks provide something, and that's something good would also have associated risk. So Circle, now we are going to focus on Circle, whatever little information I have, and the case itself is being is under development. So so whatever I read through, basically they have they have 25% of the cash, and I think the rest of the money they haven't disclosed where, but most of the money should be in the bond. I hope they have treasury bond, because if they have treasury bond, the money is safe. The capital is safe because they're always backed by federal, I mean, treasury. So it's like government will always pay. So the safest asset on the earth right now is the treasury, right? Treasury bond right now. Remember, not forever, right now. Okay, because US government will pay. Okay, the bond price fluctuates, we know, but it is secured at this moment. You get paid. So if they have treasury bond, um, then if they have treasury bond, then well and good. Another thing is they could incur 3 to 4% interest rate on those bonds. Again, I don't have data, but what kind of percentage. I hope they have purchased some bonds which have higher interest, because recently yields have gone up. Like you see 10-year treasury yields on my right bottom corner of the screen, 3.7%. It went down, but it was close to 4%. So I hope at least they have 3-4% range of bond. If they have, it will be additional income from them, right? So they could issue stable coin from bond as well, not necessarily US dollar, because treasury bond is equally strong because it is backed by US government. Okay, so that point of view, if anyone issues stable coin, of course it's unregulated, but I think it's secure from that, because unless the US government itself defaults, which is a far-fetched scenario, hypothetical scenario at this moment. It doesn't happen, because if that happens, then a government shuts down, right? So I mean, nothing, I mean, everything can happen, you never know, but at this stage that's not the situation. So bond, if they have treasury bond, and so they could issue stable coin. If they have real cash, they can issue stable coin, of course in non-regulated environment, but at least we can say they have something to back up. Okay, so what, as per the tweet, Circle announced that they have 25% of cash. So the rest should be in some instrument. And as I'm assuming, or I hope, I would say, I should not assume, I hope they have in treasury bond, not in any risky bond, like not in some private equity, or not in some kind of in companies bond. I hope it's treasury bond. uh we'll learn about it, I'm sure. Okay, so right now the focus is that 25% of the cash, and focus is the $3.3 billion, which is with the Silvergate, sorry, Silicon Valley, Silicon Valley Bank. Now there are 6 banks, they said, that 25% of the money is distributed in 6 different banks. So I read their names. Only one bank is solid, which is BNY Mellon. I know that bank. So, which is solid bank, comparatively, pretty large bank. Rest of the banks are very small. I mean, you you wouldn't hear those banks. Even this kind of, even Silver, I mean, this Silicon Valley Bank, nobody heard this kind of bank. So these are small banks, and they're vulnerable one way or another. So the my worry is not Silvergate. So they had money in Silvergate, and they had money in Silicon Valley. So 6 out of 2 were this. If we exclude BNY Mellon, which is relatively very strong, then we are talking about 3 other banks. I don't remember exact name. Those that um, it's on the Twitter, somebody posted, but other 3 banks are very small banks. So we hope that those banks stay alive. They don't go through what we saw. So that's the thing. So immediate concern is that $3.3 billion in cash. So I'll just highlight. So I mentioned about the split and all. So in summary, basically 25% cash, 75% somewhere. That somewhere should be in treasury bond? If not, then that's also a risk. If yes, then at least majority of the money it has some concrete backup. Out of 25%, 3.3 is at risk, but we have to see what other banks are holding, and not all $3.3 billion is at risk, because FDIC insurance would be there. But the thing is, FDIC insurance, what is FDIC insurance is when you have money in the US bank, that money is insured. If the bank is liquidated or bankrupted, your money is insured by FDIC. So it's insurance. Basically, it is a law. So you would have seen that they mention about FDIC. That is nothing but insurance. But there is also a catch. What is that? I'm not an expert on all this insurance component, but being a US citizen, at least I know that I have, if my money in bank, so that is all the US banks are FDIC, FDFC. Sorry, what I'm saying, FDIC, FDIC. I hope I'm quoting it correctly. In short, let's say in short, and but I think the limit is only 200K. So if I have more than 200K, so the about 200K is not insured. That's my knowledge. Okay, so FDIC insures only up to 200K. So they are talking about insurance, but I don't know how much is going to be covered, because not 100% is covered. So that's also a fact. Okay, so there can be some other legal things which I'm not an expert on, but whatever I know, I'm just sharing. So this is fundamental aspect and a potential risk that we are talking about, a recent risk. So if the stable coin goes down, what happens is what we've seen, that the money moves to other stable coin. So that's what is happening. So irony is USDT was called out to be, or considered to be, the most vulnerable, and proven to be the most stable in today's. So this is so funny that people thought USDC is the safest, but it looks like it's not the case. But it's not fault of Circle as a company; it's a fault of the bank. But what can we say? That's a situation. People don't care whose fault is it. My point is, people see failure of stablecoin, right? The reason could be anything. So that's how it will be perceived. Now, the so if the of course the USDT is in demand. We saw the chart, like different exchanges gone crazy. Their parity is totally blown apart. The worst was on the Bitstamp, which USDT fell by 87% last night. I haven't seen the latest, but it was crazy. I think there is absolutely no liquidity on Bitstamp. That's for sure. And also on other exchanges, there were around 10% drop. And I think it's stabilizing at this moment. I think I'm going to see that chart as well. It would be interesting. So definitely people would be arbitraging between like three buckets: Bitcoin, USDT, and USDC. In last few hours, we saw in last 24 hours, I would say, people would be rotating money in these assets, and of course from crypto, other altcoin also. Now alts definitely are paired with USDT. I mean, they're paired with USDT. So if USDT is in demand, they're going to go down. It's not their fault. And BTC is not going down, or not in deep red zone like other. And of course Ethereum, if you look at the active list, only two coins are in green: Bitcoin and Ethereum. Rest are in deep red. And simple reason, because people are getting out and cashing, and either keeping USDT, or keeping, of course, or converting into fiat if they have option. If they don't have option, they have no choice, which reminds me February 2018, when I was not a TA and got panicked when it was free falling. There was no stable coin. There was nowhere to hide. I had to, horrible situation basically. Anyways, so right now the situation is where people would either keep USDT, and that's why they sell off. People are just panicking. So the other alts are not at risk, but they're just panicking. Of course, some of the DeFi would be at risk one way or another, because if they have USDT as as one of their um, financial instrument, then of course that coin or platform will be affected, right? Because their value will go down indirectly. So I would assume, I haven't checked. I woke up late today, so I haven't checked. Maybe if we have more time, we will check some of the DeFi coin. What are they doing? But I'm assuming logically that DeFi coins are at risk because they are directly related. They would be related to the USDC, because that was considered to be the safest coin, if not the ultimate safe coin, but relatively safer coin, I would say, compared to other. Right. So I think that's the situation on a fundamental side. Um, so yeah, if you have more information on fundamentals, please share after our recording is done. I would like to hear your thought as well, right? If you have some additional information, but I thought I'll cover at least this much, and this is good enough. So essentially we have new variable added to the equation. The equation was anyway not so good in so much of turmoil, and this is one more factor. So now what is next is, when next week, I think we'll hear something from the bank. I believe they have to give some statement. Also we'll hear something that how much money is really recoverable, and I think based on that we'll have a situation. So that's something is important. Another, since I'm talking about fundamentals, another important things are the recent job report. You got the update. The next one is the Tuesday CPI, right? That's for the February month. US CPI number. This is the ultimate number in my point of view, because that's going to be the final punch, or the major weighing factor for the Fed, in my opinion, or based on what I read from the experts, that the CPI number is going to be the decisive, right? So that's important. So Monday we'll look forward for what uh, that bank will say about how much they can generate. I mean, they can recover from liquidation and all, and that will tell us. And another thing is, um, of course, next week we should not hear any bad news on other small banks, because you never know. Two banks we already heard. We don't want third one, right? Because then it would be contagious, in my opinion. And why it is happening? Someone was asking. I think yeah, Milo was asking, I think. So why it is happening? These banks, I think the logically there is no other reason but liquidity crunch. Um, these banks would have very shallow reserve, not like big banks would have like good amount of reserve. These banks operate at a very low reserve, and when people withdraw money, I think my hunch is, I don't have proof, but my hunch is people would have invested in treasury. If you look at the market, the bonds went up, like yields dropped. If you look at the 10-year drop by 5.5%, and all the different let me quickly open all the different tenure. If you look at this one, 3 months, 2 year, 7-year, 10-year, 20-year, 30-year, all of them went down. Red. The yields went down means the bond went up, right? So they go in inverse. I won't be able to cover, but you can read more about it. Basically, when yields and bond, their price go in opposite direction. So when you see yields, these are yield chart, or if the yield goes down, that means bond price went up. So why? Because people would like to lock. The bond is confirmed, as I mentioned, confirmed return, confirmed. As long as U.S. government is not in liquidated or bankrupt, I should not say bankrupt, but defaulted. your interest is secured. The most, as I said, the most safest instrument on the earth at this moment is treasury bonds, whether it's a T note, short term or a long term. And so my hunch is people would have bought this one, they would have cashed out and bought a lot of these bonds. And we saw that bonds are rising for the last 2 days, like Thursday and Friday, especially heavy buying. So the money definitely went into, so this drop is also related. I think it's mix of many things, but it's primarily it's about liquidity crunch. If I say, like for an example, why dollar index is doing this and that, you talk about many things, right? War and all. Ultimately, Fed's decision is driven from inflation. There are multiple factors, but if you have to say what is the key factor, the key factor is inflation. That's why Tuesday number is very important. So the factors could be many things, like supply side, demand side, like supply chain, China, or war. That is supply side factors, and here the demand side factors like excessive cash, that demand side, and that's why interest rates are going up to curb that demand side. As so, point is, um, so the point is, if we have to highlight what is the factor is inflation, right? The ultimate factor. Here, I think in the recent episode, the the ultimate factor is liquidity crunch in my understanding. So that was also a cause for those banks to fail, and because of that, I think the money went out from, because the money moves. You remember, money doesn't disappear. Once the money is printed, they don't go vanish. They remain in the system. They are either sidelined or move into some asset. So very interesting is happening. I hope I'm not boring you because I digressed a lot from TA, but I thought this is very important, probably more important than TA at this stage. So I thought I would cover this. So hope you're not bored. Um, yeah, I'll just complete the flow, you know. Right. So, uh, what all things I'm observing, I'm just trying to share because, as I said, the money, like whatever, like $30 trillion, whatever total money. I'm not talking about credit, but let's say printed money, 2022 or 23 trillion, the M2 money supply we call that is there somewhere, some in some part, right? They move around, right? So in different asset class. So what I'm seeing is the money went into bond, huge amount of money. That's why even stock market went down, not just crypto, but in last 2 days, stock market went down for no reason. Why I'm saying no reason? Because I think the dollar was not the reason. The dollar index fell in last 2 3 days. You see, let's look at the last actually 3 days. The dollar index is actually top 3 days ago. This is Thursday and this is Friday. It went down significantly, but the stock market also went down, and there is no logical explanation for that. The only one possibility, because and the bond yields also went down heavily. Look at this price action Thursday and Friday. So only logical explanation to this one is the money went into bond market. People bought bond. And why people bought bond? I think there's only one reason I could think of. Again, a financial planning point of view, which is to secure the future, financial future. Why? Because there is a potential risk of recession, and they would like to secure 4 to 5% interest rate on the safest asset on the earth. That's the bottom line. So, anyways, I hope you would find this helpful, understanding the big picture. So, whatever I could understand or I understand, I explained and shared. Right. Of course, Bitcoin is just a small part of the big ocean we talked about, and other coins are nothing. like in terms of their weightage. And so I covered a lot today and probably it's very important to understand the big picture, because just focusing on crypto, you're not going to understand the big picture. Just focusing on the bank and the circle is not enough. Why bank failed is also important. Another aspect I think I must include that commodities, where the gold went up by 2%, which you should notice, which I tweeted, and I would like to highlight here as well. Everything, so some of the commodities, silver, gold, went up, right? So this is very important factor. Uh, so this is like money went into some precious metal and bond. So affected asset classes were equity like stocks and crypto. Okay, let's come back to our TA stuff. All right, let's okay, so yeah, basically we are here. So technically speaking, this is where we left, right? Technically speaking, if this support zone is held, and this is perfect, like S3 was a support, and it did a good job by offering this bounce. This was a really good bounce, but this bounce is not just because of, this is like they were parking money into Bitcoin. That is one of the reasons why this happened. Whatever is the reason, technically speaking, reason do not matter, to be honest. So whatever is happening is positive at this moment. Okay, positive for Bitcoin right now, or BTC, right, and probably Ethereum. I cannot say the same for other coins for the reason I mentioned, because situation is very different this time, where USDT is in demand and alts are paired into um, paired with USDT. So people are not looking forward, and they are probably feeling that BTC and ETH are safer than other coins. So that's the logical reason why BTC and ETH are relatively strong and relatively holding value, right? So this is a unique situation. Otherwise, if the BTC is doing okay, the alts would also do okay. But in this situation, it is not, and we have a reason for that. Okay, so from a BTC chart point of view, this support zone is the ultimate one, because in and of course, if anyone is trying, I think we had to forget about a rest of the coins, in my opinion, unless and until we get clarity. I'm just telling, not an advice, but it's obvious. If anyone is trying to, you know, um, we can try out with something small, but nothing major, because it would be so risky, in my opinion, at this moment. So I think we need clarity next week. Um, so maybe it's a break time, that kind of a thing, where we need clarity. This is at bottom, but it's not going to rush on the upside. So maybe one can trade BTC or Ethereum, and that's it. I don't think other coins need to be touched. Again, not financial advice, but common sense at this moment. um, because we don't know what might happen to them. They are really vulnerable at this moment. Okay, so technically speaking, this is the support. Now let's look at weekly and zoom out and see the bigger pattern here on Bitstamp. So as I had highlighted, we had a big consolidation which was forming top. This was topping process. This was uptrend. This is topping, double top. This is beginning of the downtrend. Then this is the low. This was the retest of the low. Okay, I'm just recapping few things for your benefit. This was unforeseen FTX event. That's why it made new low, but not very deep if you look at. So this is still the same low, I would say. price wise, it's new low, I agree. However, it's the same low because this was more panic, and this is like when it's a cascading effect. When the liquidation happens, the cascading effect happens because the market orders would push the price down like this, and that's why they break support. But as you could see, it would not go that deep in that case if this is the low. So this low is not much of a difference. So we put a box, and you can see clearly that it consolidated and then gave a nice breakout. Now this is the point of rejection for this low, and this low is more or less the same as I mentioned, and this is also the same. So basically we can say this is the first attempt, recovery attempt, failed, retested, and this is another retest as I mentioned, and then there's more of a divergence, or I would say digression. And then this would have happened probably from here. It happened here, and then this is the second attempt. So this is the first attempt. This is the second attempt. Now I covered this part, so I won't repeat it. So we had this two scenarios which I had depicted last time. These drawings are from last week, not this week, before this happened. So this scenario these scenarios were detected or identified beforehand. So this was the rosy scenario, the nice bullish scenario. It didn't happen, so we can remove it now in this week. Right, so this didn't happen, and this is where it is. So this red arrow, you see, you cannot see it's overlapped, but this red arrow here, you see now. Yeah, this was the red arrow. Now I can remove it because it reached to this level. Right now, look at this one. Now this is another decision point, right? So this decision point, it decided to go and continue down. So that scenario is clear. Now this is on a second decision point on a weekly time frame, that it would either follow this one or this one. And what is my point of validate? I mean, the recent low is the level where I would decide what to do, because that's my reference point, right? So if that happens, of course, this may not go direct all the way. This trend line is so important. So maybe this, I would draw up to this one. There is a reason, because this trend line is strong. It's supported here. And I'll talk about this trend line. I would like to spend some time on this one, which I think I covered in last year. But after this bounce, I would like to come back on the scenario for your knowledge, okay, which is very important. That if this recent low is broken, what might happen? I think everybody is interested. So I should cover briefly at least. And I have already recorded a video actually, but I haven't posted. I recorded video before this, so you won't believe it is uploaded but not distributed. And this is before this drop, like 3 days ago. You won't believe. And it's my, again, I'm not trying to say I got a vision, but you sometimes subconscious says there's not something right. So that's something happened. But since it was not convincing because there was no price action, I thought, why to talk about something which hasn't when there is no probability. So I recorded, uploaded, but not posted. But I'm going to share at least, no, I can share that video link as well, but I would just walk you through. I think that would be easier. Okay, now, yeah, so it could land all the way here, right? It could land all the way here and then go up, right? So there are basically two decision. So of course, this one is my immediate decision point, which the recent low is my reference level, and this one is my second zone, right? This is the last one, 18K range. I'm not saying one has to. So as I mentioned, I won't repeat the trade planning part. If you haven't watched my video on trade planning, it was posted on Academia. Please refer it. If you're new, I don't believe in DCA that every time it makes new low, I would average out. I don't believe in that DCA, and I explain the reason why. So if you haven't watched, you watch. I think I highly recommend you watch it. So I won't repeat whatever I covered there, right? So basically, this could be the next landing zone, and you won't believe it could survive from here. So I would add another loop and say, okay, now this is going down, but this could actually go down all the way here and then follow the same as from a scenario point of view. See, I'm not giving you hope. This is technical. People should not misinterpret that I am giving hope. It's not about hope. It's about condition. It's about key levels. I had clearly mentioned resistance. The resistance is always a checkpoint, whether it will decide it will retrace or consolidate and continue. It was explained, it is known. Then the supports are given. Supports are checkpoints. What it does on support, if support is broken, action has to be taken. You cannot just sit tight unless you want to. I'm not saying you must, but supports or key levels are given, so it can be used for planning. If someone doesn't use, then it's their choice, right? It's the personal choice. So again, the recent low, the S3, I would say, on Binance that we covered, is another support which defended. We see defended. I'm not saying guaranteed, but it defended. So support do work. They do defend, but not necessarily they give guarantee that that's it. It will bounce from here. It could bounce, but not high enough. Then it goes down. That's the behavior, right? If the rocket launches, but it doesn't picks up certain height, it falls to the ground on the ground. So it's then the gravity catches. So similarly, if the bounce is not high enough, the gravity catches and make new low. Simple. So same gravity law applies here. So the bounce has to be high enough for it to escape the atmosphere. That's why the green level is the boundary of atmosphere, the required level on a Binance chart. It has, if it breaks above that green level, that means the rocket will be out of space, out in the space, out of the, Earth atmosphere. That analogy. So it's so important. People just think about support, but support is always 50%. I always say that two parts. One is support. You need to know the support because you could then plan, or you could, see the reaction. And second aspect or part is the height. Then only that you get confirmation, not just support alone, height. So that's why I give two level, the support and also the required level, because support will give you the chance, not confirmation, but the required level gives you the confirmation, technical confirmation. So this is to be understood. So sometimes people ignore totally, and they think, I don't want to impose my style or my way of thinking, but and sometimes people need to think which is working. If their methodology is not working, they should think that there's something being offered here, something different, and they had to follow. If they at least they could try it out. So here I'm saying the recent low is the checkpoint. Now, if somebody is just decide to keep the recent low below recent low, it's a choice. What can we do about it? Right? If there is nobody's, and again, as I said, sometimes it's a false breakout and one can onboard. Like I mentioned, for example, I give an analogy like this. Let's say you are on a bus, right? And you get down on a specific bus stop. But as soon as you get down, realize, hey, oh, sorry, this is not my bus stop. Okay, so what you do, you immediately get back in. You hop in again. realizing that no, this is the wrong one. This has happened to me. I'm sure this has happened to many, that you this. And I bring this analogy because sometimes analogies are easy to understand. So sometimes the price goes below support for a brief moment, because supports are not like rule that market has to follow. Those are probable levels. So sometimes it spikes and breaks supports, and we call false breakdown when it is falling, and then goes up. And if that happens, one has to set alert again to ride back in. That's the analogy I gave, that, oh, this is my wrong station, I had to get back in. This is not my station. So that's how you should, I mean, visualize it. So if one is stopped out, and if it bounces and goes above support again, that means it was a false breakdown, and trader must be alert. An alert should be set and act on it. So first of all, there has to be stop loss, no doubt about it. But tricky situation like this happens, then one has to be ready to get back in. So that's also second mistake. First of all, they don't have stop loss. Second thing is, if there was a false breakdown, just in case, they don't get back in, and that's how they lose the opportunity. Of course, in this case, there was no such thing, but I'm just hypothetically saying, even if that happens, one has to watch for it. So when it is at support, when you are entering, or you have to be watchful and pay some time and use alert. I'm not saying you stick to the screen, but at least you should have alert set to handle this scenario. If of course it so so let's say, so if the recent low is broken, and if there is no false breakdown, it could land on this 18,200 range. We'll see when it happens, if it happens. But this is a major support line. I'm going to zoom out and show you again why it is super critical. And then it could really surprise the market, because I see the symmetry of the pattern is not broken. And let me help you to visualize the symmetry part here. You see this arch. I drawn a similar arch. This is more like a mirror image. If you do the partition, then you will understand what I'm trying to say. You see and now you compare this left hand side and a drop, then this one and a rise. This rise is a mirror image. Don't try to compare bar by bar or candle by compare. It's more about shape. It's not about candle by candle. So just a clarification, okay? It's not like you're seeing in front of the mirror and try to compare your left part of the body to the right. It's not like that, but I hope you got the message. That this is the center line, this is the mirror, and this is the left hand side. And what we saw, this is the comparable to this one. This point is comparable to this one. This bar is comparable to this bar. This arch is comparable to this arch. Don't try to say, oh, this is like 2-step, 3-step, this is 1-step, 2-step. No, it's about the shape. And probably it is more evident when you look at the line chart. And I'll hide the drawing, and you see with more clarity here, right? It's, so as I said, it's not always symmetrical, but there is symmetry, not a perfect symmetry. So this is how it looks like. So I hope technically it makes sense. So this is scenario, and that's why I'm saying the people are panicking because they probably don't know what is going to happen. I think you don't need to know what is going to happen. You might, I'm not contradicting to myself. Or people think that TA knows about what is going to happen. Utterly wrong. TA knows key levels. That's the difference. Key levels, which are like support, resistance, and required level, 3 elements, they know it. And of course, they know the patterns. When you know the patterns, you can find out the edges, because the pattern offers, like, I give an analogy. For an example, if I just show my wrist and say what body part I'm trying to show, you will say hand. So I don't show my full hand. I'm just showing my wrist and fingers. There's no ambiguity that this is human hand. You're not going to say this is a head or something like that. You're going to assume, because mind knows how the hand looks like. So if I show you wrist and fingers, you can and ask you about what body part is there, you're going to say this is my hand. So likewise, the pattern offers you the partial development of pattern, offers you the remaining part of the pattern, which I'm trying to depict here, and gives you the endpoints or the shape or the path or trajectory. And that's where TA comes in play, technical analysis comes in play. We don't know the future, but we do know the key levels and the turns and the shape and the path, and that's where we make decisions. So this is more pragmatic, realistic approach we take, rather than saying, I know what is going to happen. I know it's going to be 50K, 100K. I know it's going to be 10K. That is rubbish. That is just rubbish. They are astrologers, not TA. Okay, if it was that easier, probably they wouldn't need to spend time on social media or anywhere else. Then, and of course, they are not doing charity for sure. Nobody does charity in real sense, hardly anyone. So there's always a motive, always. Right. So these are the two scenarios. Now we are going to zoom out, right? We are going to zoom out and see, this is the line. Now those drawings are tiny. So these lines, so I wanted to remind again, so this is super critical line. It gave the bound, so this was the revival. Like it spent 2 months here. It was on edge. It survived, but now it's coming close, which is not a threat at this moment. But if 1800 range is broken, then we are doomed. I'm using this word, we are doomed, for a reason, because this line was never broken. This line was never broken, and this is so important. It should not be broken, in simple words. Otherwise, there could be devastating effect of this one. And at this moment, it's very hard how deep it would go, but it could go up to 12K, 10K, 6K. I won't talk about 1K, but it is 1K is on the page, on the table, possible. And really, it could go really bad. And in that case, it could really form the ugly pattern, which I don't want it to see, which is this. And like this, there is a symmetry here. And I would, as soon as I draw the line, you will say, oh my goodness, what I'm talking about. And this is just a scenario, not a probability. It is only if the 1800 range is broken. Then this is a scenario up to this 6K or all the way up to 3K retest, and then a bounce, and then a huge head and shoulder, which probably people are not talking about it. People are not talking about this head and shoulder at all. But I would draw it. Like this. This is a neckline. I'm not saying from a patterns understanding point of view. Now you can see this. This is the uptrend, and this could be continuation of the downtrend. This is this is very cloudy. I mean, drawing point of view. But let me hide all the drawings. See, this is first move, second move, topping, first one. I mean, of course, there's little bit, but major one like this, and then up, and then this could come down like all the way here, or so this is another head and shoulder. This is another neckline. Actually, this is also the two head and shoulder patterns here. One comes down all the way to 6K, bounces, matches this one, and then goes down and create the huge one. which I depicted, up to 3K, and then bounces all the way up to 14K, and then comes down again. If I mean, if that happens, this I'm talking about multi-years scenario, and I hope it doesn't happen. But it's not our hope; it's our scenario, and I have a logical reason which I am not going to talk about why I'm saying, because that's why I recorded the video, but I didn't post because the probability is very low. But since it's near 20K, I thought at least I will talk about the big scenario here, big bearish scenario here, um, for awareness point of view. And I have a technical reason why this could be the ultimate top, but not for now. I'll share after a week or two if price continues to go down. There is something major, and then we have to literally forget about long if that happens. But at this moment, we can say the game is not over. The game is not over. But yeah, you never know about it. So on this platform, you will be shocked, in my opinion, only if you're ignoring what I'm saying from a big picture point of view. Only if you are ignoring the key levels that, hey, it's broken, fine, it's all right, I don't care. Then it's all on you. Okay. Because from a TA point of view, we cannot do much about it, right? We nailed down the bottom. We nailed the R1, and we also detected ongoing correction that you see in this path. And we have to, if we are not planning as per this key levels, then I think we don't have to blame the market. So people, this is very easy thing. People blame market. I say don't blame the market. Blame the market. People blame the market only when they don't know what market is trying to do. So my famous quote, I say, I would not say quote, but usually this is what I say, that don't think how market should do. You should do what market is trying to say. So point is, market dictates the terms, not your desire, not our desire, right? So our desire should be in line with market, not vice versa. And those who do that would always be happy, because that person is accepting the situation, not living in the future. So don't live in the past that this is what happened to me. Don't live in the future. Live in the present. Simple. I mean, trading point of view, life also, yes, life point of view also, but trading, I don't want to sound like a philosopher, but it is true universally that focus the present in trading, focus the key areas in trading. You should have a plan, exact plan. What is my point of entry? What is point of exit? How much money I'm going to spend? It must be on paper. If you don't have on paper, you are not a trader. Okay, so again, things, one can change the style right away. You don't have to wait for tomorrow. Right away you can change your style and adapt good practices, I would say. So this is the time, challenging time. Okay, so I talked a lot. Maybe I can quickly go through alls, though it's not needed, but I'll go through as per our routine. APT on a weekly. Oh, we are going to also see what. Don't go away. I'm going to cover quickly the prism, how prism looks like on this one, right? So don't go. APT, go. No sign of bounce on a weekly. If you want support for any alt, ask me, because I'm not giving, because it's making new low every, like so some, if any coin is making new low, I mean below support, if you're interested, please ask me, because I don't want to calculate if somebody is not interested. So ask me for that. Okay. Anything that is there from the past, we can use it, but I won't give support for the alts unless you are interested in. I'm happy to, because how will it calculate for 15 coins if nobody's buying it or planning it? So I don't want to spend if nobody's acting on it. Atom. Atom, not bad at all, not yet. But if I draw this line from here, we can say that, okay, now it's on edge, right? But not bad. Maybe I'll keep this one. Keep this one. Evax, again, this is a read. So this is bounce retest. So bounce, new low, bounce. So you can clearly see this is channel actually. Wow, there's parallel channel, more or less. Beautiful. See, 1, 2, 3. This is a parallel channel. Yeah, parallel channel. So this gives you the boundary, this gives you the boundary. Channel point of view. I should use different color. Yeah, this is dangerous. So this is descending channel. PNB. PNB not bad. It's above support. Similar to Atom. Atom. I think this we can draw a line. Still okay. PNB still okay. Doge. Doge hits the support again. So we can see that this is likely to break below. Likely, not necessarily. Seeing is believing, but then we can extend this line, in my opinion. Then somewhere this line can actually guide us. So if this is broken, it will land here. This is the typical behavior. But no way, this is like this is from a simple trend line point. This is broken here. So this is gone. I'm keeping Doge. I think I'll throw a Doge soon once the market is okay. I don't think Doge has any substantive value. I'll replace it with something. Because Elon is not doing anything. So if Elon is back, we'll add back. Otherwise, there's no one to back up. DOT. So DOT is on support. Uh, what to say? Yeah. EGLD, similar thing. It couldn't break above this trend line. If you look at this, it couldn't. So similarly, this also has a descending channel. Ethereum, relatively good. So we can extend this line. Worst case, it could touch this. Still good. This is still in a good position. So you can clearly see the loops here. Loop, loop, loop. And then there could be another loop like that. Potentially. So this is definitely not done. This is a huge pennant from a pattern point of view. Look at that. This is the boundary. Again, pennants are not so statistically reliable pattern, but it's a pattern. It's better than nothing. At this moment, this pennant or triangle, symmetrical triangle, makes sense. FET not at risk compared to the wave. So, but if you are interested, I mean, of course, naturally, this is our support. I don't want to add, actually, I have to calculate it. I should not just go by this. But if you're interested, like me, as I said, FIL is losing one after another. I'm making me again. It's like around 40% retracement from this low, swing low. FTM, back on orange. We can extend this one, and probably this could be the landing area if this is broken. Again, FTM is could be related to, I mean, exposed to the stable coin thing, so potentially vulnerable. I mean, so Matic reacted near the support, which is good. So potentially it could make another loop like this. Like this. Oops, where is it? Yeah, something like this. So this is a nice pattern.
So Matic is on support, right?
Yeah, Matic is on support. It's not broken. So this is like spike below this support, but you can say this recent is your reference point now. It's not quite broken.
Cool.
Yeah, it's not quite broken.
Okay.
The pattern is not broken. If now you can visually see this pattern. Yeah, it's yeah. So it's more like a necklace pattern, or it's inverted head and shoulder, but not. I would not say head and shoulder inverted because this head is too short. So I don't have name, but we don't need name for that. But this is like a wavy pattern, you know.
Yeah, makes sense. Okay, happy to know that.
This is also expanding pattern in a positive way. If you look at this one, this is how you may depict it. This is like it's weird. It's not descending triangle, but it's like inverted. I don't know how to say it. A mirror image of descending triangle, like somebody. So this is the small part is here, and the large part is here.
Gotcha.
Just impacting. Yeah. Yeah. So if this is broken, it comes down to this, which is not good if that happens. But this is not a threat at this moment. So after Bitcoin and ETH, I think this is the third coin, I would say, relatively okay, strength-wise, if I have to rank them this week in the present.
Yeah.
I would not say just 2, but 3. But in like Bitcoin, Ethereum, and then Matic, 1, 2, 3, rank point. This is going down some. There's no need to talk about it. And these coins are crazy. Once the environment changes on a positive side, these coins are crazy. They recover like you won't believe. I mean, you won't get chance to get in sometimes if it happens during your off hours. These are crazy coins. They pump so hard. But right now they're so vulnerable. I mean, let them go down. No need to look at them, in my opinion. Near. Yeah, broken support, right? So see if this the thing, if anyone had bought it, fine, but not acting on support, then what can we do? I hope people are not ignoring support. Risk management is so important. RNDR has been going down for last 3 days, right? And support was broken. Of course, this is also support one way, but there's no end to the support. I'm not going to give more supports, but I'm just going to draw a line like this, unless you want me to. So this is a support, right? This is a support, a pretty strong support, or I would say the last support, because if it goes down, the whole entire structure is gone. So this is the last support. And the opportunity comes. Remember, the big opportunity actually is not big opportunity comes from challenging times, right? But if one is aware of a potential risk. So the big opportunity comes with some risk, but if the planning is good, let's say I'm adding RNDR, for example, hypothetically, and if it bounces and even if it goes to, then I'm going to double my money, more than double my money. However, I if it starts going down, and if I must get out from a risk management point of view, I'm taking chance. So basically, it's about taking chances at support. Uh, but then yes, so with a proper risk management, one can actually take advantage of the situation. So that requires some experience and control in mind, that one can start small, add little more on the rise, add more, and then ride the rally. Because if it goes up, for example, from here, if it doesn't make new low, I'm not talking about RNDR, but any coin, like wherever they are, if the market improves from here on, they're going to shoot up like anything, and then potentially make new high. Why not? Right? Because they're low, they haven't made new low, so they're not broken. They're going down, but they're not broken from a trend point of view, recovery point of view. They're not broken, right? They're weak but not broken. So in that case, if this goes to R1, if I take a trade here, so of course, I would end up with 250 percentage. But that comes with proper planning, that if it continues to go down, I cannot hold it. It will be suicidal, because then it could go all the way to this level, 0.56, and not necessarily stop there. So that is given, right? That is part of the trading. So
I think it's the best buy.
I mean, sometimes the drop like this, if
It's a
you're
very good opportunity. Yeah.
yeah, that's what I mentioned yesterday on Bitcoin analysis, that for some this is threatening, and for me it's opportunity. Now, but it has to be explained properly, that opportunity doesn't mean the guaranteed profit. People think opportunity means profit. No, opportunity means a probabilistic scenario where there could be a success down the line. That's opportunity. But that is always a conditional, that if it doesn't bounces but make new low, that opportunity turns into risk. So people always try to take the positive side, because we try to be optimistic. And from when we see profit. But yeah, so it is the current situation is actually full of opportunity, because even if this coin go back to their prior rejection point, everybody will double their money. Everybody. However, it comes with risk if it continues to go down. So if you take chances, you might end up with some in and out. But the smart trade, which I'm not going to cover because it's covered in the trade planning, so I'm not going to repeat it. So you watch that video for that. I explain the same scenario. Oh, I must remove the arrow. This is just for explanation. This is a checkpoint. Sand is still going down. SOL near support. It couldn't break below above this. We can draw this simple trend line here. Beautiful trend line, actually. So downtrend is not over, of course. So look at the structure, and let me explain through so this is a typical behavior. No asset goes down in straight line. This is how it's typical behavior. But this height is not ordinary height. This is a good height. Okay, I'm not going to reveal my secret, but if this could come down up to this one or this one, unless it comes down, this is also worst case scenario. See, if it bounces from here, wonderful. If it bounces from here, not bad. If it could bounce from here as well, why? Because this is a double bottom scenario. Why not? Possible. Okay, on paper, yes. So it could go all the way, of course, not in a straight line, like a zigzag, blue, 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 and so on. Like this by end of the year. Why not? And this could be like this or this or this. So trader has to take chances at different occasions. You don't have a choice. Or there's another alternative is one waits for the breakout. There are two approaches. Again, I'm not going to repeat. There are two methods. One, chances at support or where it pauses, or wait for breakouts. Like this is my, so if hypothetically, if it bounces from here, this is one breakout level. The second breakout is this one. So this is the potential entry. Second is this is the potential. So that's covered in that video. If it makes new low again, then the breakout level would change because this line will extend, right? If it goes down even further, then this could even come down like this and then becomes this becomes. So one can try here, one can try on breakouts. Got it? So I hope this is clear. I'll keep it somewhere in middle for now. This is just for explanation, right? And of course, if it breaks, then it goes down and continue the downtrend. Yeah. So if we don't have to be sentimental about it. We get sentimental when we are attached. Try to keep some detachment here for our own good mindset. Because if it continues to go down like this, it could go really deep. Really deep. It could go hypothetically all the way to $1. Hypothetically. Not now, but otherwise, this is my rosy scenario or bullish scenario. Yeah. Situation is not that bad. Okay. So there's no need to panic. But yes, planning is needed. Planning is needed. I hope you find this session very helpful. We covered a lot of things. I'll end the recording here, open for any questions. Oh, and we'll go through your coin. So you give me coin, we'll see how they're doing from a trend point of view using what indicator I have? Prism. Yeah, Prism. Yesterday I accidentally found one method and I named that constellation yesterday. Of course, this is like came out of an accident, so I'm working on it. I'll share once it is available, but I'm not going to throw a lot of indicators. I'm going to consolidate eventually. But this is like a different method, moving average based method. So I'll share once the work is complete. I have basically added, usually people use simple moving average, but I added other methods and came up with this indicator. So let's see. Anyway, so I'm going to stop. Oh, I'll continue sharing actually. Stop the recording.